Hello and welcome to Bloomberg Quint. Agam and I are here to wrap the markets for you, and it's been a good day for the markets. The in Nifty and the Sensex both continue to build on its strength, gradually inching up through the session and ending at the close to the day's high. So if you look at Nifty, that ended with gains of about 0.4% and held on to 89.50. It closed above 89.50, and this was the first time it has been able to hold on to or close above that 89.50 mark for the first time since March 2015. We've seen that 89.50 level being crossed intraday multiple times in the last 1 or 2 weeks, but we haven't been able to close above that. So today we were able to do that. Sensex also managed to close about 29,000, and Agam, so Nifty has recovered all of yesterday's losses, and what is interesting here is this is despite the weakness that we saw in IT stocks. So TCS, Infosys, both index heavyweights, but despite that we were able to see that kind of jump that the Nifty saw. Of course it was auto and pharma stocks, they kind of outperformed, and that's one reason they were able to offset, more than offset your negative impact from the IT stocks. Broader markets, mid caps, small caps, both the indices outperformed. They did better with about 0.7% and 1.5% gain, so better than Nifty. The broader market breadth again was positive with the advanced decline ratio of 2:1. So overall, yes, a good market. Anything interesting that you spotted as far as the futures and options are concerned?
So as you mentioned that we've seen the Nifty move up about 89.50, and that also leads us to where the options have headed. Now we are looking at a big base formation in all the options with a strike price of around 8,700, 8,800 and 8,900 too, despite the fact that we're only 50 points away from that particular mark. So let's take a look at the maximum open interest distribution. As far as puts are concerned, we have them at 8,600, which is your firm base there, but it's the 8,700 and the 8,800 puts which are seeing a significant increase towards maximum open interest. 9,000 on the upside continues to remain very strong, and with respect to what's happened today, no surprises here. We're looking at some substantial amount of writing once again in the same strike prices for as far as puts are concerned, and on the 8,700, 8,800 and the 8,900 puts. So we have seen a lot of activity there, and while we haven't seen as much open interest accumulation in the futures, they are looking at longs. Of course, we will have the final figures with the release of the power copy in a couple of hours from now. But for now, what is certain is that we are looking at substantial support around the 8,800 mark, and that will be one level to watch out for, at least on the downside. But for now, if the markets may not go up substantially, we're certainly not expecting them to move down further. But that's as far as the Nifty is concerned, and you did allude to some weakness in IT stocks. So what else are we keeping an eye on when it comes to the big movers and shakers, at least as far as the Nifty 50 is concerned?
Yes, so there was good news across some of these sectors. One sector that I do want to mention about is the Nifty Auto Index, Agam. That was up for the 9th straight session. So in fact, Nifty Auto Index is up about 10% just in the last 2 weeks. So a lot of strength building up as far as some of these auto names are concerned. Of course, we also had Siam data that came today. Pharma stocks saw good strength today. So we had Sun Pharma, Aurobindo, Lupin, Cipla, all your Nifty pharma stocks doing anywhere between 2.5% to almost 4%. So definitely a day of pharma stocks. We also saw, as we mentioned, Bajaj Auto, you have Maruti, you have Hero. All these stocks, auto stocks, did well. On the losing side, you have Yes Bank that lost as much as 5%, and of course that was on the back of the QIP issue. TCS, Tech Mahindra, HCL Tech, Wipro, Infosys. All your Nifty IT stocks ended in red, not surprisingly, and we will talk more about what really went wrong with all those IT stocks. Another loser, BHEL, down 1.8%. Now, BHEL, remember, gained as much as 15% yesterday after a strong jump in their Q1 profit growth. But somehow this profit beat hasn't really seemed to have excited the analysts. The analyst community does not seem to be impressed with BHEL numbers. Analysts were expecting that the execution challenges, weaker margins, weak order inflows, all these issues which have been a challenge for BHEL. They expect that to continue into the remaining FY17 as well. What is interesting is that most of the broking firm reports that I actually went through, they had a target price of anywhere between 75 to 122. Now that is significantly lower than the current market price of 150, 160, really signifying what kind of downside we could see in case the markets correct. Another stock that we have to talk about is TCS. Agam, what went wrong?
Well, as you said earlier, if had it not been for the weakness in the IT sector, we would have probably seen Nifty at a much higher level. And it is the IT sector led by TCS. Now, last evening we had a release from Tata Consultancy Services, which suggested that the management will take up the business outlook for this particular quarter with some of its investors. But they've also added that when it comes to some of the business and the way it's been for this particular quarter, well, at least as far as their customers are concerned, there's been some amount of caution which has been raised, especially by their customer base in the United States, and this comes from the banking, financial services, and in the insurance space. So they have said that the customers out there are holding back on discretionary spending, and that could possibly lead to a slowdown in momentum as far as revenues go for this particular quarter. And on the back of that, we've seen correction in TCS, which has fallen and corrected as much as well over 5%. And following TCS, we've also seen a correction in Infosys as well as some other IT companies. So that's the major reason behind this weakness in the IT sector. But Shraddha, you were also going through Morgan Stanley's note on TCS. Can you tell us a little more about that as well?
Yes, Agam. So all these past few days or weeks, we've been talking about how the valuation discount had widened between Infosys and TCS, and now finally we're so Infosys somehow TCS seem to have been really till now so far protected from the kind of global environment and economic slowdown worries, Brexit impacts that you're really talking about, because Infosys did indicate in a sort of warning the issues that they could face, some revenue risks that could come in. TCS finally said that today, and hence I don't know if you could see that valuation gap really narrowing again between TCS and Infosys. TCS trades at about close to 18 times FY17 forward earnings. So Morgan Stanley believes that is expensive, and they've said that TCS poses the most downside risk if the stock were to test its 2011 trough levels of 15 times. So that's the kind of downside that it could see in case we do see some negative implications on the Q2 numbers. But that's as far as all the large caps were concerned. If we move on to the mid caps, yes, mid caps outperformed today. I'm really going to talk about all the gainers. Jammu and Kashmir Bank, that was the top gainer on Nifty 500 index, up as much as 10%. HCC, Hindustan Construction Company, that was locked at 10% circuit. Now this stock has seen some sharp moves. We had seen about 4-5 straight sessions of gains on the back of the arbitration awards, and there was hopes that would lead to debt easing for infrastructure companies. So HCC had seen a good move for a week, then it saw 2 days of correction, and now we're back to a 10% sort of upper circuit. IRB Infra, that was another gainer, up as much as 9%, and that is even as IRB Infrastructure Investment Trust Fund, they filed for an IPO. They're looking to raise as much as 4,300 crores. So some sort of asset monetization benefit coming in for IRB Infra. Some pharma names did see strength. You saw Marksons Pharma, you saw Wokhard, all of these ending with over 5% gains. You also saw some other names like Torrent Pharma, Strides, Suvain, Fortis Healthcare, Granules. So all your mid-cap pharma stocks were doing well today. That apart, real estate was a sector which was buzzing. So you could see stocks like Prestige Estate, India Bulls Real Estate. So both ended with over 5% sort of gains. That apart, you also had Suntech Realty, Kolte Patil, Anantraj, Shobha Developers. All of these stocks really doing well today. So it was the day of pharma stocks and real estate stocks.
Right. So coming down to the losers, and overall, while I agree with you that the broader indices have done much better and outperformed the benchmarks, let's also take a look at some of the losers as far as the mid-cap space is concerned. Coming down to Inox Wind, now we're looking at a lot of weakness in Inox Wind. This is not the first time that we've seen about a 5% decline today. When it comes to Alson, TND as well, and SH Kelkar is showing a lot of weakness, particularly after we've seen so much strength in SH Kelkar. It's been up by as much as nearly 20-25% over the previous 3 weeks. Electro steel castings, of course, was one of the usual suspects to show up on this list. We also have Motherson Sumi now back to the levels at around 330. 327 is where it closed, but we have seen a correction of around 2.5% there as well, with Group Finance as well as Nitin Fire Protection, some of the trader favorites here, also showing some amount of weakness. But well, like I said, at least as far as the broader markets go, they've done much better than your big benchmark. So overall, it seems like it's been a market for the bulls. But that's as far as the equity markets are concerned. What can you tell us about the bond and the rupee and crude, Shraddha?
Agam, so bond yields, the 10-year bond yields continue to continue to fall. So it has come down from the levels of 7.118 that it ended at last week. It has fallen to about 7.051%. So fallen bond yields and a rise in bond rupee, so that rally we are seeing. So of course they're ending inching closer to that 7% mark. We're going back to those levels that we had seen in 2009. Rupee also more or less was more or less flattish today, down about 5 paise ahead of the ECB meeting. If you talk about WTI crude, that was that has seen some rebound again. So it's up about $2 this week itself. So seeing some strength ahead of the US inventory data today. Is that what we're looking at?
Yes, absolutely. Considering we've seen a little bit of a spike up in crude in the past couple of days, we are going to be keeping an eye on the US inventories data. And this is, of course, a weekly feature. But this week particularly, it is going to be more important. Of course, other than the crude inventories, we're also keeping an eye on the ECB meet, where we will have the president and the vice president talk about the monetary policy and the course that they will take eventually, considering all the economic factors. So that's another one that we can keep an eye on for. But that is as far as today's markets are concerned. You guys can come back tomorrow and join us for more on market action only on Bloomberg Quint. Thank you.